Hello everybody, this is David Blair, the Crosshairs trader, and today is December the 28th, 2010. Been out of the market and out of the home for several days on vacation, visiting my wife's family, several states away. Glad to be back. Doesn't look like I missed much in the stock market, and that's not surprising to me. But let's take a look at several of the indexes, and then we'll take a look at a few stocks that gave us a signal before Christmas and basically has done nothing since. Again, not surprising, as the market is pretty much stalled out and having a hard time going anywhere. For those that are new, weekly chart at the bottom, daily chart at the top. That's all I look at. I do have the futures charts that I keep over here, S&P futures and NASDAQ futures, to give me an idea of where the general market is heading, possibly, and support and resistance, trending, consolidating. But let's take a look. Begin with the S&P. S&P, I've been stating here for a couple of weeks now, has got some major resistance right overhead, and we keep slowly grinding our way up to that resistance level at around 1267. That goes back to July of 08, July, August, September, October of 08. That hasn't changed yet. Still not there yet. So when we look at our daily chart, you can see that line right there. Also, we had an itch back a couple weeks ago. We broke out after that itch, and we've just kind of grinded up. We had a few, us Crosshairs traders, a few upside trades to trade, and they've kind of, as we're going to see in a moment, like most of the trades we did, kind of petered out. And again, has to do with the low energy level, low volume of the market right now. Not surprising. NASDAQ has actually broken out to a high, a higher high than the S&P. However, we still have some resistance up here. Market is coming back. NASDAQ's coming back like we'd like it to. We Crosshairs traders consider candle counting very important. We see that on the ES and on the NQ here. The highs back here, we're getting ready to possibly try to tap again from October. And we're very near there. Candle counting has gotten very high. Again, we study candle counting and the relation between the candles and these lines here. And right now it's gotten kind of high, getting kind of risky. We need it to pull back some, which is what's going on right now. Take a look at the Dow. The Dow again is going to look just like the futures. Had an itch. We broke out on that itch after a few days, but it's really grinded a little bit higher. Not much. We still got some resistance up at 11,715. OEX, same thing. They're all going to look the same. Candle count's getting high. We need to start considering that. S&P gave us the itch. Candle count's getting high. We've got some resistance way up here. We really need some consolidation. I'd like to see that for a few days, and then possibly continue to trend and go higher the first couple of weeks of January. Have that first of the year move. But there's been years where we've done nothing but go down in January also. So we're just going to have to watch it and see from a general markets perspective. Now, some of the stocks that we looked at before Christmas, BMRN, you can see where we had the itches, but now they've come back, and almost all of these stocks are testing that breakout. Not surprising with the market just not really going anywhere. So testing, we're aware of that. ESRX, same thing, broke out. Look at it, it's coming back. Testing, same thing, not really going anywhere. So not surprising. EXXI, same thing, broke out. Actually, it was consolidating at a breakout level, started going higher, but again, with the general market, it's coming back. Not surprising. We trade with the general market, and when there's risk, the risk levels are high, we either trade lightly or not at all. Stanley, Black & Decker, SWK. See, for the last 3 or 4 days, just basically doing nothing right above that 65 level. Right here. And TLM. TLM, again, gave us a breakout on that itch, and basically has done nothing since. Again, not surprising. Sound like a broken record, but that's just the way it is. We trade at Crosshairs Trading, we trade with the general market, and it's not surprising. We are aware of the fact that the general market helps move stocks, and right now the general market's in an area of consolidation and slowdown. Low volume week, again, not surprising, but we either trade lightly or not at all. But there will always be a trade. So what if we think we missed something? You only miss something when all your rules are met and you refuse to take the trade. Other than that, there's millions of trades that we all miss every single day. But we also know that the market will be here tomorrow and the next week. So what if we don't get them all? All right, a few that we recently did that we got out of. Deere. We had a profit target right here that's been sitting there for weeks on these videos I've been doing, and we got out. Now it's pulling back with the market, and we'll see if maybe Deere will give us another trade. Amazon took its own sweet time also, finally broke out, and now it's again pulling back to test this breakout level. Okay, so not surprising, it's done this over and over again. It'll break out, pause, breakout, pause, breakout, pause. This is the kind of trading here that tests your patience, focus, and discipline right here. And it's having a nice orderly pullback. Let's see if it can hold above that level there. And ADP is one other one that I'll conclude with, doing the same thing. Broke out nicely here, and then look, it's done absolutely nothing. But as long as it stays above the breakout loss line here at about 45, 85, 46, whatever you want to call it, as long as it stays there, if the market decides it's going to continue to rise higher, ADP is in a perfect position to continue higher. It's like it did here and here, and it may do it here. But we're going to have to see the general market prove itself and ADP stay above that loss line, get its strength again. Candle count has started all over again. What we look for to give us the ability to either add to positions if we're still in this position, or get into a new position if we're not. Okay, but that's what I'm seeing. There's really nothing new. There's some things that have been firing over here in my proprietary software, which is available if you're interested. There's been some things firing, but for me there's just nothing going on right now, and it's just not worth it for me to risk my money in the stock market until I see some more conviction. But we're ready when those things happen. Have a wonderful day, and come back and see me at thecrosshairstrader.com, and email me at david@thecrosshairstrader.com if you're interested in any of my premium services or would like to know how to participate in a 10-week stock trading course called Crosshairs Trading University that starts the second week of January. I'd love to have you, but contact me at david@thecrosshairstrader.com if that interests you. Have a wonderful day.